interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, people? How are you guys doing? Let me know how you're doing in the comments box below. Today I want to talk to you about the earnings season and the importance of the earnings season for the stock market. But first, for the ones of you that don't know me yet, my name is Andrew, and for the last 10 years I've worked in many retail and institutional forex brokerages in Europe. Join me in this amazing journey and find out the secret corners of forex trading from top industry specialists. Learn what most forex brokers don't want you to know by watching our daily broadcasts. And if you like what you see, guys, like, share, subscribe on our YouTube channel, and support us in delivering more great content. I'll give you exactly 30 seconds to absolutely smash that subscribe button below. And then we get started. What is the earnings season and its importance to the stock markets? Coming up. Right, and we're back, beautiful people, with the earnings season. I promised you yesterday, today I will talk about the earnings season, as the earnings season started for over a week already, and many beginner traders have absolutely no clue what this is, how it works, and why is it important. So check this out. When is the start of the earnings season? Okay, you're going to see at the bottom January, April, July, and October. Yeah, these are the months when the earnings season is running. Now, let's get into the presentation, guys. I'm sure you, by now, you click that subscribe button and the like button, and you can even let me know how you're doing today in the comments box. So, what is the earnings season, first of all, guys? The earnings season is that period of time during which a large number of publicly traded companies release their quarterly earning reports. In general, each earnings season begins 1 or 2 weeks after the last month of each quarter, which is December, March, June, or September. Okay, so in other words, look for the majority of public traded companies to release their earnings in early January, April, July, and October, guys. 4 times a year, 4 months a year, you get the opportunity to participate to the on the earnings season. Now, long story short, in layman terms, any company that's listed on the stock exchange is obligated every quarter to release their numbers. Yes, so their investors see how that company performed in the last 3 months. Okay, if the numbers come better than expected, then very likely the stock price will go up for another 3 months. Yeah, unless something big happens along the way. If the earnings report comes below expectations, then most probably the stock price will tumble for a bit of time until the company comes forward with a statement that encourages traders to purchase the stock, basically. So this is what the earnings season is. Now, there's more to it. Why is earnings season important, guys? There we go. I'm gonna leave it bigger. I'm gonna leave the charts bigger on the screen so you can see. Why is earnings season important, guys? Earnings per share is a very good indicator of the profitability of any organization, and it's one of the most widely used measures of profitability. The earnings per share is a useful measure of profitability, and when compared with earnings per share of other similar companies, it gives a view of the comparative earning power of the companies. Earnings per share, when calculated over a number of years, indicates whether the earning power of a company has improved or deteriorated or not. Investors usually look for companies with steadily increasing earnings per share, but not always, guys. Remember, whatever goes up must come down, and whatever goes down must come back up, which takes me to the next slide, guys. What assets are affected by the earnings season, guys? Mostly stocks, stocks and publicly traded companies. However, indices, guys, are affected as well, because an index is nothing else but a basket of stocks trading together. So when you're trading stocks, you can trade the individual stock one by one, or you can trade an index which has a bunch of stocks together. This is how it works. Okay, these are the assets most affected by the earnings season. Moving on, we still have a couple of slides to go. How does it work, guys? Very, very simple. Following the historical behavior of stocks, you can take advantage of the current volatility in the market by playing the earnings game. Just because some stocks tumble due to disappointing earnings does not mean that they are not a good investment anymore. Remember, guys, people tend to buy when something went down, when something is cheap to buy. So if you get a bad earnings report and the stock price tumbles, you might want to look at it as an opportunity for a long position, guys, because it's definitely worth it. The company is really not happy if the stock price goes down. Yeah, we all know those fancy CEOs, that live in mansions and have a lot of yachts. Yeah, they are not happy if the earnings per share go down. That means they're getting less money. So they're going to do whatever is humanly possible, to bring the company back on track in the shortest time possible. Right. Hi, Kevin. Hi, how are you, man? I see we have some comments. We have some brave people with us today. Kevin, good afternoon, brother. Right. Okay. I will share the link. Don't worry. I'll leave the link in the comments box. So, in fact, if a stock tumbled, following some disappointing numbers, they can be an attractive buying opportunity as long as the fundamentals remain sound, guys. If a company is constantly exceeding expectations and its earnings keep showing good results, this doesn't necessarily mean the share price will keep going up. And this, if the company is doing bad, it doesn't necessarily mean that the share price will keep going down. They're going to look for a solution. They're going to look for a savior. Maybe a cash injection from an external source. Maybe they're going to change the CEO. Maybe they're going to change something within the company. To try and bring the company back on track. Now, let's move on. We still have a few things to talk about, guys, and then we're gonna go to the charts of the day, guys, and we're gonna witness the U.S. Trading session. Big things happening today in the economic calendar and in the earnings calendar as well. Now, the impact of earnings reports on indices, guys, because many beginner traders still do not know what an index is. It's nothing else but a bunch of stocks trading together. So this is an example of what happened in 2018 in October, when Dow Jones erased gains for the year and tumbled more than 600 points as stocks extend October soon. So this is the impact of bad earnings reports on indices, guys. Very important to know. If you get it wrong on a stock, if you're trading stocks individually, you can't really get it wrong if you're trading an index and if you know your asset and if you know what is going on with the markets. Okay, so sometimes it makes more sense to trade an index than to trade an individual stock. Okay, now, moving on. What is a trading strategy for the earnings season, guys? Know your asset. Very important to know your asset, to know the company that you are planning to trade on. Follow the latest news, guys. Companies tend to announce their earning reports either before market open or after market close. So any news that comes out might completely change the direction. So follow the latest news, guys. Be aware of what's happening. 3, understand the bigger picture. This is imperative. It's not all about today, especially when we're talking about stocks, especially when we're talking about big companies listed on the stock exchange. Okay, you need to understand the bigger picture. What is the bigger picture? Every single company wants to do well. Every single company wants its share price to be as high as possible. Okay, so this is the bigger picture. Don't be scared if a company posts disappointing results. It's fine. The share price is going to drop a bit. Most likely it's not going to go to zero. And then you can see that as a good entry for a potential buy position. All right. So do your homework, be aware, understand the bigger picture, understand what the company wants and what the company has planned for the next 6 months, 12 months to 24 months. Now, as I mentioned a minute ago, these companies will announce their earnings reports either pre-market open or after market close. So position yourself on the market ahead of the results. Okay, if you position yourself on the market ahead of the results, then the markets will very likely open with a gap, either to the upside or to the downside. Yeah, the following trading session. If you're already there, then when that market opens, if you're on the good side of the trade, you will jump straight into profit in a matter of minutes. From there on, it's your responsibility if you want to close the trade and grab the profits and look towards other assets or asset classes, or you want to keep on trading. Yeah, you want to leave that position open for a longer period of time. Now, number 5, guys, calculate the risk. This is very, very, very important so you don't blow up your trading account. Trading stocks and indices usually have a lower leverage, and higher margin requirements, which means a higher investment from your side. So if you have a tiny trading account, a $500 trading account, think twice if you want to trade stocks or indices. You will have to open a bigger portion of your trading account, exposing your account to potential losses. So calculate the risk. Is it worth it? Can you afford to open that position? Can you afford to open 2 or 3 positions? Maybe a couple of individual stocks, maybe one index, or the other way around. Calculate the risk. Okay, and the last but not the least, guys, do trade responsibly. It's not all about today. It's not all about putting your eggs in one basket and going all in. This is not poker, guys. Okay, you should have funds behind you just in case something goes wrong. Okay, you should have those funds behind you. Your stock trade might drag for a couple of days and you don't want to close it because very likely it's going to go up in a couple of days. Or your index trade might drag on for a couple of days, meaning it's going to start eating from your balance. It will expose your account. So it's not all about today. Do not gamble it, guys. Okay, do trade responsibly. Right, this is it, guys. This is it. If you have more questions about stock trading, about forex trading, trading commodities, or Bitcoin, guys, do contact us, and either myself or one of the members of my team will contact you and help you understand how everything works. InstructFX.com, info@InstructFX.com, or my direct email, guys, thechartwhisper@gmail.com. These are the web address and the 2 emails where you can contact us. Feel free to contact us, guys. Right. Stay tuned. We're coming back live in a minute or 2 with the US markets open, guys. Very big day on the markets today. Don't go anywhere. We're coming back in a few seconds.
Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. What's happening, beautiful people? Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. How is everyone doing this afternoon? Let me know how you're doing in the comments box below, guys. And please remember to absolutely smash that like, share, subscribe button. Subscribe on our YouTube channel. It helps us a lot in delivering more great content, guys, and it's absolutely free. If anything, it might even benefit you. You might find out things no one else could tell you. Now, let's get down to business, guys, and see what is happening in the markets today, Wednesday, 27th of January, 2021. U.S. stocks are under pressure today with the Fed meeting in focus and earnings reports from three tech giants. Apple, Tesla, and Facebook are expected to report their quarterly numbers today. Crude oil price drops ahead of the crude oil inventories, testing the $53 mark to the downside once again. The US dollar rallies ahead of the Fed meeting, pushing the euro down to 121 flat. And Bitcoin, guys, everyone's favorite, tumbles even more, trading close to the $30,000 mark. US markets open. Coming up. Right, and here we are, beautiful people. I told you there's a huge day in the economic calendar today, so I'm going to start with the economic calendar, then we're going to move on to the earnings calendar. We're going to have a couple of interesting articles, and finally, we're going to look at the charts of the day and the signals of the day, guys. Big day in the economic calendar. Nice and early this morning, guys. We got a bad news from Germany at 9 o'clock GMT plus 2 with the German consumer climate falling, doubling basically on the negative. Versus what consensus had predicted, negative 15.6 versus a prediction of negative 7.9 from consensus on the German consumer climate. Now, very likely this was the trigger for the euro to start dropping today. Now, we still, at 10 o'clock, we had the World Economic Forum, the annual meeting, which usually happens in Davos in Switzerland. This year, due to the COVID pandemic, they did it online, guys. It was an online economic forum. Still important, still interesting what's happening. Then what did we have? We had the France job seekers total, which topped up to 3.586 thousand. Okay, versus a previous of 3.586.3. Okay, so we had more job seekers this month than the previous month. Again, this was probably the second trigger that contributed to the euro tanking today. Right, in the afternoon, 1 hour ago, guys, we had the core durable good orders in the US coming out positive 0.7% versus a prediction of 0.5% from consensus. We had the second one coming out on a negative, though, 0.2% versus a prediction of 0.9%. At 5:30 GMT plus 2, which is exactly 1 hour from now, guys, we're going to have the crude oil inventories and the Cushing crude oil inventories, followed by an FOMC statement and the Fed interest rate decision, the first meeting this year. Now, they are expected to keep the interest rate unchanged at 0.25%, guys, hoping to boost the U.S. economy. But high volatility is expected during that time. We're going to close just ahead of midnight, guys, GMT plus 2 with the trade balance announced on the Kiwi dollar. Okay, so this is what is happening in the economic calendar, the FOMC statement, the crude oil inventories, and the Fed interest rate decision. And to top it up, guys, we're in the middle of the earnings season. We're going to have Apple, Facebook, and Tesla announcing today their quarterly figures. So expect a bit of volatility. Now, let's have a look at the earnings calendar, guys, see what is expected to happen. Right, the first one is Apple. And Apple has a forecasted earnings per share of $1.41 for this quarter. For the last quarter of 2020. And the forecast for revenue of $102.54 billion. With a market cap of $2.43 trillion. Huge, probably the biggest company ever. Now, we're going to have Tesla announcing as well. $1.04 earnings per share expected and a revenue forecast of $10.47 billion with a market cap way below Apple's at only 800 only. Right, let's say only $837.08 billion. Nothing. So We're gonna have Facebook announcing as well. Facebook is expected to announce something around $3.16 per share by consensus. Anything matching that or above is considered as a positive, and the share price might shoot up. Now, in terms of revenue, Facebook is expecting minimum 26.31 billion. Okay, with a market cap of $803.36 billion. We had Boeing reporting earlier on, guys. Disappointing results for Boeing, negative $15.25 in earnings per share. The revenue, though, was better than what economists have predicted. I don't know how, if most airplanes were grounded for almost a year now. But anyway, it's not my job to know how. It's their job. AT&T also reported better than expected earnings per share today and better than expected revenue. Okay, the earnings per share came out at 0.75 cents versus an expectation of only 0.72 cents. And the revenue, guys, $45.69 billion versus an expectation of $44.52 billion. Now, there's no point mentioning the market cap, guys, if I started with Apple with a gigantic $2.43 trillion. Okay, and I continued with Tesla and Facebook with 837 billion. Yeah, with AT&T only having a market cap of 212 billion on the dot. Right, so we're still going to have a few names announcing. ADP announced as well 152 earnings per share versus an expectation of 129. And the revenue, guys, 3.7 billion versus an expectation of 3.57. ADP done really, really well. Right, this is what is happening, guys, so far in the economic calendar. And this is what is happening in the earnings calendar. Now, we are only 8 minutes ahead of the US markets open, guys. Let's see what is the most important article of the day. Right, the dollar edged higher against a basket of currencies today as markets waited for comments from Federal Reserve Chairman Jerome Powell, who is likely to renew a commitment to ultra-easy policy. I don't see any other option, to be honest. If you want to boost the economy, then your fiscal policy will have to be ultra-easy. The dollar reversed declines against riskier currencies, even as pandemic recovery hopes got a boost from the International Monetary Fund yesterday, upgrading its forecast for 2021 global growth. Treasury yields, whose rise had supported the dollar at the start of this year, declined overnight amid caution about the eventual size and the delays to President Joe Biden's $1.9 trillion fiscal stimulus plan, which Joe Biden stated that he is willing to negotiate on if worse comes to worse. Now, the Fed chairman is due to speak at the news conference after the central bank's two-day monetary policy meeting, which ends today, guys. Earlier this month, the federal chairman, Jerome Powell, said in a web symposium with Princeton University that the U.S. economy is still far from the Fed's inflation and employment goals, and it is too early to discuss altering monthly bond purchases. Now, this statement, I keep hearing it for over a year now. Let's see what's going to happen from here. Meanwhile, the dollar index ticked up 0.1%, guys. Following a 0.2% decline in the previous session. Okay, the British pound climbed to its highest since April 2018 at 137.53 before trading slightly lower at 137.24 this afternoon. The Aussie dollar slipped 0.2% to 77.30. And the euro dollar, guys, dropped. The euro tanked big time today. Big time today. Right now, analysts said reports on Tuesday, the European Central Bank was studying whether differences with the Fed's policy are boosting the euro. Part of a wider review of financing conditions would not have a material effect on the currency. ECB President Christine Lagarde had repeatedly said the central bank is carefully monitoring the single currency's exchange rate. I know I'm monitoring it every day, but I still can't do anything about it. But I'm glad you're monitoring it. Now, What is happening? Right. Okay. Impressive statement. We suspect they might find that higher inflation is more credible in the US than euro-dollar spot is closer related to the global manufacturing sector, which is doing well, not European services, and maybe that expectations are elevated in terms of Europe's comeback, said Lars Sparesso Merklin, senior analyst at Danske Bank. Right. Either way, this adds to a growing number of countries who appear uncomfortable with the US dollar weakness. I'm not uncomfortable unless I'm getting paid in US dollars. Right. Let's move on, guys. Let's see what is happening with on the other side of the pond. U.S. stocks are seen trading lower today, with investors focusing on the tech sector as a number of household names report earnings and the Federal Reserve's latest policy meeting. At 7:05 a.m. Eastern Time, the Dow futures were down 226 points, or 0.7%. The S&P 500 futures traded 28 points, or 0.7% lower, and the Nasdaq 100 futures dropped 15 points, or 0.1%. Whoa, 226 points for the Dow is quite a steep drop, guys. Now, the tech-heavy Nasdaq Composite is likely to outperform today after software giant Microsoft reported a 17% increase in revenue in its fiscal second quarter on a year-on-year basis. Additionally, the company reported its Azure cloud computing services grew 50%, pleasing investors who see this segment as key to the company's future success. Right, now, the second regret is that I did not invest in this company when I had the opportunity to do so. Now, I have another regret, but I won't share it public. Now, earnings from the crucial tech sector continue today, with investors no doubt hoping Microsoft's solid numbers reflect well on Apple, Facebook, and Tesla, who are all scheduled to report after the closing bell. Aside from these tech big names, the likes of AT&T, Abbott Laboratories, Boeing, General Dynamics, and Corning are due to report before the opening bell, and we saw their reports. Catastrophic results for Boeing, guys. Catastrophic results for Boeing. Now, the investment firm Melvin Capital has announced that it had closed out its short position in GameStop. Short sellers in the stock are down $5 billion on the market-to-market net of financing basis in 2021, according to analytics from S3 Partners. Also of note, today is the conclusion of the latest two-day meeting of the Federal Reserve at 2 p.m. Eastern Time, which is 1900 hours GMT, or 2100 hours GMT plus 2. It's first under the Biden administration. The central bank is not expected to alter its stance on rates or asset purchases, and it's likely to recommit to a highly accommodative policy stance. Of course, Federal Chairman Jay Powell is expected to offer more insights on the progress of recovery and the Fed's view on growth for this year. Right. Oil prices climbed today, boosted by... No, they actually dropped today, not being boosted by industry data. The data from American Petroleum Institute released yesterday showed a draw of 5.272 million barrels for the week ending January 22, compared with a forecast for 603,000 barrels built. Right, so in less than 1 hour from now, guys, we're going to have the crude oil inventories. Now, are you ready for the charts of the day and the signals of the day, guys? We're exactly 1 minute away from the U.S. markets open. Are you ready? Good. Let's take a 1 minute break so I can catch my breath, and then we're coming back live with the charts of the day and the signals of the day, guys. Stay tuned.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, guys, and we're back. Before we get to the charts of the day, guys, I want to share a few stocks with you. I want to share a list of stocks with you so you can make an informed decision when it comes to stock trading. But first, welcome to the US trading session, everyone. Now, Microsoft stock rose 1.7% after the software giant reported the first quarter earnings and revenue beat consensus estimates, led by strength in its fast-growing cloud business as the pandemic accelerated the trend to digitalization. Right. Now, Boeing fell 3.5%, guys, when the aircraft manufacturer reported a net loss of 2020 of $11.9 billion and pushed out the debut of its 777X airliner to 2023. Starbucks fell 2.9% after the coffee chain reported a larger than expected fall in quarterly sales as the renewed surge in COVID cases in the United States kept customers home. There is a delivery service, though. If you would only lower your prices, I'm sure more people will order more. GameStop, guys, soared 43%, retracing earlier gains of over 100% after an Elon Musk tweet generated more interest in the video game company. Musk, a favorite of retail investors, tweeted a link to a Reddit thread about the company. Walmart fell 0.6% after the retail giant said it will add small robot-staffed warehouses to dozens of its stores to help fill orders and pick up and delivery as Americans shift their spending. Right. AMD fell, Advanced Micro Devices fell 5% amid worries about the company's margin growth, despite it beating quarterly revenue estimates and forecasting robust 2021 sales on strong demand for its chips. There you go, guys. You see, a news will completely shift the direction of the market, even though you might have good earnings per share or good revenue. If there's no prospectus, if there's no long-term plan for the company to do something great, then the investors will lose hope. And this makes the stock price drop. Now, AT&T fell 2.9% after the telecom giant reported a hefty fourth quarter net loss of $13.88 billion. That said, the company added 800,000 net new postpaid phone subscribers during the quarter ahead of expectations. This is it. Now, quick look at the charts of the day, guys. Wow, what a drop in oil after the U.S. market opens, guys. What a drop in oil. 52.28. Wow, over 70 cents, guys. Oil dropped over 70 cents within the last half an hour. 52.27 for oil as things stand right now. RSI stochastic at their lows, guys. You can see the volatility, and I'm on a 1 hour chart. Okay, imagine what happens if I decrease it to a 5-minute chart or a 15-minute chart. Okay, big drop for oil. If this will continue, guys, we might see oil going as low as 51.60, as that's the previous low. Let's see how the results will come. Now, we are exactly 1 hour ahead of the crude oil inventories. So there's another strategy. We might see oil price dropping for 1 hour straight down to 51.60 or even below. And when the result comes out, it's going to go all the way back up. Testing the 52, 50, 53 maybe. Let's see what's going to happen. Big volatility on oil as things stand right now. There we go. We're looking at the euro US dollar, guys, the most traded currency pair in the world. Trading at 120.90 today after tanking the entire Asian and the entire European trading session, guys. Right, if this will continue, probably traders will set their first take profit targets a bit lower, around the 120.57 level. But let's see. The pound dropped as well. The pound is well supported by the 200 moving average, and overall, we're looking at the British pound in an uptrend versus the US dollar since the Brexit happened. Funny enough, who would have thought? Okay, so overall, if we draw a trend line, guys, if we draw a trend channel, and we mark the average highs and we mark the average lows, we can see that this is a trend channel. And we could potentially get a direction, get a hint on where the price is looking to go. Now, careful at that 200 moving average, guys. If the price is going to bounce, it might bounce from that 200 moving average and and go higher. If it's an uptrend, it might happen. Otherwise, it's going to come down, test this trend line, and if it's all good, it's going to turn around and head to higher highs. Okay, that might be a very, very interesting long opportunity for some traders. Now, let's move on. We're looking at the USD JPY, guys, which is rallying today like it's on steroids ahead of the Fed meeting. However, RSI stochastic are way into the overbought levels. Yeah, expect a bit of a drawdown. We might see a bit of a drawdown on the USD JPY after such a rally. 104.06 this afternoon for USD JPY after it pushed higher for the entire European trading session. The Aussie dollar took a beating, guys, just like the euro and the pound. Okay, and it dropped sharply for two straight trading sessions. 0.7674 this afternoon for the Aussie dollar on a 60-minute chart. It's currently at a very, very important support level, guys. If it's going to break this support level, probably traders will eye for the next low, which is somewhere around the 0.7630 level. Okay, very, very important support level. Yeah, look at all these bottoms here. Okay, the bottoms on the chart, guys. Don't look out the window. Right, look at all these bottoms here. It's currently testing the bottom for the 1, 2, 3, fourth time. Okay, a breakout is likely to happen. And looking at the tops, guys. Okay, looking at the tops. How the tops keep keep dropping. Very, very likely we might see a breakout to the downside for the Aussie dollar. It depends very much what Jerome Powell will say, what the interest rate decision will be like, and what will be discussed at the Fed meeting this evening. Right, USD CAD on the other hand is rallying 127.92, almost 123. 128, sorry, for the USD CAD pair with the RSI and the stochastic way up into the overbought levels. Okay, there is potential to the upside. But what I'm afraid of is a pullback. Yeah, after such a rally, after a 8-hour rally, you might see a bit of a pullback. Some traders will start closing their positions. So this might translate into a bit of a meltdown on the markets. But tremendous rally today for the USD CAD. It's apparently looking to break this resistance level that we see here. As long as the candlesticks manage to settle above that level, then very, very likely we're going to see the US dollar pushing even higher versus the Canadian dollar. Yeah, so all eyes will be on this area of the chart, guys, to see at least 1 or 2 or 3 candlesticks consolidating above that horizontal line that I drew there. Now, let's see how the S&P opened. Wow, it opened to the downside. What a big gap for the S&P 500, guys. Very close to a retest to that 200 moving average. 3786.72 for the S&P 500. Let's look at the Dow. Wow, what a big drop for the Dow. 3484 for the Dow Jones this afternoon, guys. Wow. Okay. All right. Now, if Joe Biden will manage to say something positive, if Jerome Powell will manage to say good things, about the stimulus measures, about what's expected to happen from the U.S. side of things, maybe this afternoon or tomorrow, we're going to see the S&P and the Dow going back up to higher highs. But until that happens, brace for volatility. There we go. We're looking at the US dollar index, guys, again on a 60-minute chart. Amazing rally. Amazing. Just fantastic rally for the US dollar this afternoon. 9076, 765, 773, 90773 for the US dollar index. It's still pushing. RSI stochastic, almost off the charts, guys, into the overbought levels. Expect a bit of a correction. This is all I have to say. Right, if the US dollar index goes up, guys, we know that gold futures will drop. $1,834.90 this afternoon for gold futures. On the drop, guys, we saw gold futures moving below that 200 MA. We saw a death cross being formed by the 50 and the 200 MA, indicating a potential downtrend. And if that's the case, probably traders will eye for the 1,805 mark as their first take profit level. It's only $32.50 from the current market price. So yeah, it's not that difficult to achieve. We saw gold futures bouncing even $100 a day. So $32, I'm sure it's fine. Right, we're looking at. I know. You want me to go to the Bitcoin faster? I will. Let's have a look at the Brent oil futures, guys. 60-minute charts. Sharp drop for Brent oil futures as well. It moved below the 200 moving average on a 60-minute chart. 55.26. Yeah, with the RSI stochastic way into the oversold levels. Let's see. It's tricky with crude oil and Brent oil right now, since we're gonna have the crude oil inventories announced in about 45 minutes from now. And now, guys, the moment you've been all waiting for. Look at the good almighty Bitcoin, how it's tanking and tanking and tanking. $29,853 this afternoon for Bitcoin. It is on a downtrend. I keep telling you this for the last 2 or 3 days. There we go. Right, if we're going to see this death cross form there, and if the downward movement will continue, don't be surprised if you're going to see Bitcoin back at 20,000, where it was before. Okay, we're even below that. So extra caution when it comes to trading Bitcoin, guys, as it might go back to 20,000. Okay, now quick look at Ethereum, which just like Bitcoin is pulling back a bit, but not as aggressive. Yeah, as the mighty cryptocurrency. However, yeah, we see the tops here. We saw a lower high on a 4-hour chart on Ethereum versus the US dollar. And again, we might see a retest to the downside of that 200 moving average around the $1,056 mark. All right, RSI stochastic pointing downwards sharply. Okay, this is what's happening so far with the markets, guys. The euro on the drop, the dollar on the rise, the US dollar index on the rise. Gold is dropping as well. Bitcoin is dropping as well. Everything is dropping apart from the US dollar. Right, and I think the trading signals provided by investing.com will help us understand this a bit better. Euro US dollar, the most traded currency pair in the world. 4 red this afternoon, 4 strong sell indications. The pound, guys, versus the US dollar. 3 strong sell indications and a strong buy on a daily chart. So for the next few hours, according to investing.com, the pound will drop. USD JPY, USD CHF, all green for them. 4 strong buy positions for the USD JPY and the USD CHF. We're looking at the USD CAD on a strong buy on most time frames as well. Okay, so the dollar is rising. Whatever is traded against the US dollar is very likely dropping this afternoon. Okay, the Aussie dollar is dropping. 4 red for the Aussie dollar. The euro versus the pound. 4 red. Euro versus the pound. 4 strong sell positions. The euro versus the Japanese yen. Again, all red. 4 strong sell positions. Euro CHF. 4 strong sell positions. And the pound versus the Japanese yen is in a strong sell on 3 out of 4 time frames. Now, let's have a quick look at commodities, guys. You see, today, the direction of the market is a bit clearer, even though the markets have not settled yet, as the markets only opened about 15 minutes ago. But the direction is much clearer. The euro started dropping last night, guys, and it accelerated today during the European trading session. Look at commodities, guys. All red on the charts. Strong sell for gold, strong sell for silver, strong sell for copper, as well as crude oil, WTI, and Brent oil. All red on the charts. They all have strong sell indications this afternoon. Even natural gas, strong sell on a 5-minute chart. The hourly and daily remain a strong buy, though. So we might only see a bit of a pullback on natural gas for the next hour or so, and then it's going to resume its uptrend. US wheat, guys, which was green most of the week, today is indicating 3 strong sell positions. So when it comes to commodities, guys, everything is expected to drop, at least for now, at least as things stand right now. Let's have a quick look at the US indices, guys. Although it's a bit depressing, let's have a look at Wall Street. Okay, I suspect we're going to see exactly what we saw on commodities. There we go. NASDAQ 100, all red. S&P 500, strong sell indications. Dow Jones, the big NASDAQ. And the Russell 2000, the small The small cap 2000 again with all red, all strong sell indications. Right, so bad day as things stand right now for US indices, bad day for commodities, bad day for the European currencies, guys. Yeah, and it seems to be a good day so far for the US dollar versus its other peers. Right, once again, I have to highlight this. I cannot stress this enough, guys. Please be careful. We're going to have the crude oil inventories announced in 40 minutes from now. We're going to have the FOMC statement. We're going to have the Federal Reserve interest rate decision this afternoon, which is expected to remain unchanged at 0.25%. Yeah, and then again, an FOMC press conference. Very high volatility expected on the US dollar, guys. We might see a sharp drop after 8 hours straight of creating higher highs on the US dollar. The situation might turn around, okay, in 3-4 hours from now. This is it from my side today, guys. Join me again tomorrow, same time, same place. We're going to learn something new, and we're going to have another look at the markets and see what happened with the markets from today till tomorrow afternoon. Until then, remember to trade responsibly and may all your trades be in the money.